Hey there, welcome to the video. I'm Scott Welsh, and we get together every week to talk about how to beat that dreaded market. We're going to talk about a simple system that we mentioned before, but we're going to expand it out. It used to be only on Mondays, but we're going to maybe trade it a few more days. Wouldn't that be exciting? We've got other stuff too. For example, number one, we're going to talk about trading systems and how to make them anti-fragile. That is a big catchphrase made famous by Nassim Taleb. I'm not a big fan of catchphrases, but I thought it'd be fun to use it in this particular example today. Number two, we're going to have some solutions to why trading systems become fragile. And three, I'm going to give a very, very simple system, simple meaning anti-fragile, simple meaning not breakable. And then we're going to trade it all week long. All right, please do not risk money you cannot afford to lose. And these are hypothetical numbers meant to inform you. And let's move on. All right, this week in the newsletter, we're talking about, personally, my biggest nightmare, and maybe yours too, and that is when you're trading a system and then all of a sudden it starts losing, and then it loses some more, and then it continues losing, and it never comes back forever. I mean, that's the nightmare, right? Isn't that the fear? That's the fear of internet anonymous vendors when they sell you something. Well, it's going to break. Or stuff we make on our own. No, it's going to break. It has petrified me. I mean, I'm not better than you. I'm just as scared as anyone else because just the fear of this alone has been my biggest weakness in trading. It's been horrible for me. I have waited too long for systems. I have watched too long in demo on systems. I have made trade sizes way, way, way too small and been far, far too unbold, timid, in other words. It's really, really affected the life of me and my family because I could have been making tons more money, but this fear of this system breaking has really, really held me back. So maybe it's held you back. So maybe let's all get through this together, okay? So let's talk about it. Why does a system become fragile? If we find out why, maybe we can offer some solutions. Specifically, why does it break? Well, here are some reasons that I've found. Now, I've been trading robots since 2012. I've been trading since 2004. So I've been around a little bit and I've seen things break a little bit. Number one reason for fragility, people who I've listened to, remember I'm a listener of podcasts and webinars too. I love it just like you love it. People show me systems and there's just not enough back testing. It's a few months of data or even a year or two, and they think that's enough, and it's not. It's only made for the system that it was tested on. They tested, I'll go back 12 months. Hey, it looks good. Let's trade it live. I've seen that happen. I've seen that happen with my own systems. I've tested that out. Well, I try to be thorough, but what if I'm not? What if I just slop this up there? And they just roll over and break. So definitely do your homework. Test it out. I know some people don't believe in back testing. I humbly disagree. But you need to have a nice set of data to test on before you start watching it and see how it does. Number two, here's a big one. Gasp. There are people out there, people I really respect, people who I'm sure know more than me, even though I've been doing it a little while. And they tell you that walk forward testing is the key to not having a fragile system. And I believe them. And I have tested this over and over and over again. And I have tried for literally years, probably 5 years. I do it like a crazy person for a while, then I stop, then I say, oh no, it'll work this time. And I try it again, start, stop, on, off. And here's what walk forward testing is. You say, okay, I'm going to test it over 2 years of data. Okay, that's fine. And you test it. Okay, I got the parameters I want. And then you walk forward a year with no testing. So now you have 3 years, right? So you had the parameters after 2 years. You walk it for another year. And you say, okay, how'd I do? Well, I made $1,000. And then you re-optimize again on this fresh data, including the old data, and you optimize again. And then you walk it forward a year on fresh data, unoptimized data. And you keep doing that. And that sounds statistically viable. It makes sense. Some people swear by it, and I have never seen it work, ever. That's not true. I've seen it work, but I've never seen it be more profitable than just testing it once and going forward. Never. I'm still on never. I'm sure someday I will find out, oh, I could have done this maybe. But every time I test it, move it forward, test it again, move it forward, test it again, move it forward manually, it's never more profitable. Or if I use TradeStation's Walk Forward Optimizer, maybe the most advanced piece of software in the world on the market, when I use the Walk Forward Optimizer, take the recommended parameters and run those forward, again, it's not as profitable as if I just did it manually and held the statistics and the inputs the same. I guess it would just be the inputs the same, statistics change. You know what I mean, right? Keeping inputs the same and just watching it trade for years, I'll say it one last time, is always more profitable for me than walk forward optimizing. Isn't that crazy? So if you're a walk forward optimizer and you're not doing well, I hate to say it. I hate to say it. Anyway, trade costs. If you don't get trade costs right, or if trade costs change in the middle, you're in big trouble if you're doing a day trading system, especially, right? If you, for example, you're trading the Aussie yen and it costs this much, and then all of a sudden you think you're going to get $100 profit and you start getting 80, what happened? Or your broker changed, or the market changed, or the slippage changed, or whatever. And that is a nice little plane overhead. I'm outside today. Do you like that? Do you like the background noise? Or can you even hear it? I think it's fantastic. But anyway, don't get a lot of planes where I live, so thought I was safe. Well, you got it this time. How do you feel about that? Moving on. Maybe you have a bad platform on which to test. For example, I've gotten emails even recently about MT4. People hate MT4 Strategy Tester. I was one of them. I get it. I've done the bulk of my testing life on TradeStation. Very reliable for me, but people complain about that too. I test on multi-charts, also very reliable for me. Works great. Both of those platforms are awesome testing platforms. MT4, not so much. If, especially, you don't have 99% data. However, I'm on a testing craze lately, and my live results are starting to match almost exactly my tested results on MT4. I don't know what to tell you. MT4 is now, I have a spreadsheet. I've been tracking this now for weeks. Getting ready to announce some new robots or whatever. So I've been tracking this stuff, and I'm telling you, right now, my MT4 is matching the real life. And if your testing matches real life, guess what? You don't have this problem. And number 5, there are indicator problems. If you use indicators in your system, the reason your system may break is the indicator itself. Not that indicators don't work. I believe they do. But an indicator on your tester is different than your indicator in live. And your indicator is live is different than your indicator on TradeStation, which is different from the indicator on multi-charts, which is different than, see what I'm saying? Every indicator is calculated slightly differently on every platform in every time frame, even from testing to live. It's always different. So if you have a system that works and then all of a sudden you stop getting trades because your indicator readings don't match up, that is a real problem. That can really throw off results. Again, I'm working on ways to limit that. I think I may have found the solution for that in my robots, testing that out now, but that can lead to a problem. So those are the reasons why it becomes fragile. So how do we solve that? Well, back test longer, obviously. Don't just do a year or two, do more. Go for consistency rather than high profits. Try to make your system consistent with your data and not walk it forward. Try to find something consistent in the past data and then just watch it go. Hopefully it'll stay consistent. That has worked better for me than walk forward optimizing every single time, right? Now, how do you make it more consistent? I don't have an answer for you. I just look at the numbers and I say, that looks consistent over the monthly returns, over the weekly and the yearly returns. I eyeball it and I know what I'm looking for. I don't want to see big swings. I don't want to see 20,000 one year and minus 20 the next year. I like them to, all the years and the weeks and the months to look similar. That's how I do it. More art than science. I don't like that phrase, but it's true. Take the time to get accurate trade costs. Instead of just slapping something up there and going live, watch it for a month and then track all your trade costs. If they're the same, you're set. If they're different, then you need to adjust. Test and compare your platform, right? For example, test it on one platform and then move in and test it on another. They should be close, not exact. They'll never be exact. But if you make 50,000 with a $10,000 drawdown on one platform, you should make 49,000 on in a $6,000 drawdown, right? It should be close, extremely reasonably close, not exact. But if you see it on multiple platforms, how could you not feel confident? Or just don't use indicators. Indicators cause problems because they're different on every platform. You know what's the same on every platform? Price. And that leads us right to where we want to go. Price travels well from platform to platform, from testing to live. Price travels the same because it's pretty much the same on every chart. So you want to avoid all those problems, the indicators, the testing, whatever. You want the testing to be consistent, then try something simple that doesn't need indicators. Huh, I know. How about the weekly pivot system? It's so simple, it just might work. You wait for price to get away from the weekly pivot. It enters on price, not an indicator, and you trade it back to the weekly pivot. There's really nothing to get wrong. If it tests out on one platform, why would it not test out on the other? Unless your trade costs are way off, this particular system has got to travel. It's got to travel from testing to live better, right? It has to, doesn't it? All right, so I've talked about the weekly pivot system before, trading only Mondays. How gorgeous is that? How wonderful is that? Trading only one day a week, but some people need more trades and some people want more money. So let's trade it all week, shall we? Here is the pound dollar weekly pivot system, trading all week. Am I giving away the free parameters? I am. I absolutely am. Why? Because I love you. You wait for a price to get 80 pips away from the weekly pivot, that's your entry, and you just trade it back to the weekly pivot itself. So your target is 80 pips. So 80 pips away, if it gets there without touching the weekly pivot, you immediately enter and you go back to the weekly pivot. What's your stop loss? 100 pips. Give it plenty of room. And if you get 70 pips in profit, please move your stop to break even. Don't get 70 pips in profit, get almost to the pivot and then watch it turn around and turn into a loser. Don't do that. So that's what the system does. That's easy, and it trades Monday through Friday. That's easy. What does it do from 2007 to now? Makes about 25,000, and its maximum drawdown is 59.85. If you can't read that, pretty good. Win percentage is in the high 50s, pretty good considering our wins and losses are about the same. That looks pretty good. What would the equity curve look like? Oh, here it is. Look at that equity curve. Now, are there drawdowns? Yes, look at that drawdown. Price is stopping out. We get into a trend. Yes, of course. But look how consistent. It just keeps, yes, it draws down, but I love stuff that moves diagonally from left to right, upward. I like that. This does not bother me at all. It's not perfect. We don't want it to be perfect. We just want it to make money, okay? So what's the bottom line in all this, right? We're talking about systems that break and how to fix them. Well, sometimes they will just break. Maybe you're just too picky and you're trading a very specific type of market and it just breaks. But most of the time, it's our fault. And we did one of the things that we mentioned. It's pretty rare, honestly, that a good, consistent system over 10 years all of a sudden turns bad. You can have bad years, but it's pretty rare that it stays bad. So if you take care of all the other things we mentioned, we should be able to find systems that work for us. I mean, I'm obsessed by this. Again, the cure, keep it simple. I love indicators, but if you're nervous about your indicators being different on every platform, then just take them out. And don't optimize too much. Optimize, right, over a nice set of data, but don't optimize every single tick and every single input. Be general. Look for consistency over time, like that equity curve we just saw. An example of all this, we just talked about it. I gave you a system for free. It's the weekly pivot system. Doesn't use indicators. It's not really heavily optimized. It has a universal, makes sense type of theory behind it. There you go. There's an example of something that, at least in theory, should not break. Right? Remember, a little losing isn't bad. That can mean an individual chart works well, but the last part, and we can talk about it more in another webinar, is that, well, what if the pound dollar wasn't the only one you traded? What if there were others? And that way you have backup if things go wrong. The last message to leave you with is, yes, do all those steps on an individual chart, but maybe, just maybe, if you have a portfolio, that is your best insulation of all. All right, that's my message for this week. Hope you enjoyed it. Hope you found something useful. I'll be back next time with more good tidbits. Bye for now.